Hi traders, and welcome to my video on Fibonacci levels and how you can use them in your trading strategy. Stay tuned, I'm going to show you how you can catch moves such as this one for over 300 pips using just the Fibonacci indicator. So this is the MT4 trading platform. I have a pound-dollar 1 hour chart. You can use any trading instrument and chart time frame. I'm using the 1 hour chart just because I find them to be more reliable as it contains more price data compared to say the 5-minute or 15-minute. That being said, you can use any chart time frame that you wish. So what we're going to do is we're going to go to Fibonacci and we're going to add the Fibonacci indicator to our chart. I mean, there's different ways you can mark and plot these. I'm going to show you the way that I do it and what works for me. So first of all, I'm going to find the recent resistance, which is here. I'm going to mark recent support, which is here. The reason I'm using this level and not this level here is because this is shown to hold up 1, 2, 3, 3 times so far. And also we have a triple top candlestick pattern formation here. So this is the neckline of that particular pattern. But in a nutshell, with the Fibonacci levels, you're just going to mark the resistance and the support. And then following on from there, we're going to keep a key eye on these Fibonacci levels here. Okay. So basically, Fibonacci are numbers that occur in nature, and they can also be applied to trading. They just tend to have a self-fulfilling prophecy. That's why they're popular amongst traders for analyzing price action. So what we're going to do is we're going to wait for a breakout of the base level here, which does happen. So that can be a potential entry point there. You're just trading the breakout of the support. Okay, and then when price breaks out, this next Fibonacci level could be considered an entry point as well. So you can trade a breakout to the downside there. Okay, and then we wait for the pullback to occur. We don't really want to sell here because we've already missed out on that move there. So we wait for the pullback. Okay, let me just do that correctly there on this based on the support level. So this support, okay, so Fibonacci levels tested, we have the pullback, then it comes close to this Fibonacci level, which it doesn't go past and starts to fall down. So we can suggest that the trend is continuing downwards, and we're going to look for a breakout of this Fibonacci level here. So you could always place a pending sell order and just wait for price to break through. Okay, once we get to this Fibonacci level, we can consider that perhaps this move is exhausted. We're certainly not going to want to sell here after that big drop down. And why would we need to when we've already got this level of support? We could have taken initially this one here based on the Fibonacci level, this Fibonacci level here, following on from the pullback. So yeah, I mean, that's really as simple as I like to keep the Fibonacci levels trading. I'm going to be honest and say that I actually prefer to just use support and resistance that I've drawn myself. For example, for this trade here, I would have just marked off my own level of support on the lows and just traded a breakout of that if I wasn't looking to trade on a pullback here based on candlestick patterns and technical analysis. But some may argue that you can trade the pullback of the Fibonacci level. So we have the 161 line here. Some traders may have been looking to have a sell order up around here somewhere once price pulls back to there. Thing is, that won't always happen. You might just miss your entry point and price will continue downwards. But that being said, you can always trade the breakout of the Fibonacci level. Here as well, this initial entry, you know, we had our downtrend here, just like the line of the Fibonacci there. So we draw it in the direction of the trend here. This support line, you don't need the Fibonacci level to tell you that's support. You could have just drawn your own support line, the neckline of the triple top candlestick pattern there. Nonetheless, if you like the visual appeal and you want to use a fancy indicator, you can of course use the Fibonacci for that. Perhaps worth mentioning, if you've seen there, I just adjusted the Fibonacci line. It can be open to interpretation where to put them. I mean, some traders may use this support, some may use this one, and then some may even take it back to there. I mean, the interesting thing is if we do take it back to that initial support level where this move up here started, the pullback there was triggered. Okay, so again, it swings and roundabouts. It just depends on your trading style, how you like to pick the highs and the lows, and nonetheless, there's still various opportunities you can and various ways you can trade with the Fibonacci levels on pullbacks and breakouts. Other traders may just use it for, so they may mark this support here. If we just hone in on that, okay, let's just say price was around here. If we were looking at the chart like this, okay, and this hadn't actually occurred, anything right of here hadn't occurred yet, some traders may have marked their Fibonacci levels like this, and what they'll do is they'll wait for price to after we've had the two support, they'll be waiting for price to pull back to a key Fibonacci level, comes back to the 50, not necessarily key level, but still you can see how price bounced almost perfectly off of this 50 line here, which shows that perhaps there was some strength there, and then you could have traded the downtrend based on that. Again, other traders may have just used that level of support and looked to trade on any of these pullbacks that occurred here. The thing is, you're going to want at least two levels of resistance or support, in my opinion, before drawing an accurate conclusion. But you can see many different ways you can interpret the Fibonacci levels, but either way, whether you're trading reversals or breakouts, they can provide good entries and can prevent you entering in perhaps oversold markets like here. You want to wait for a pullback, and you may look to redraw your Fibonacci down around here somewhere. Okay, so that's an example of a bearish trend. Obviously, good money management should always be key. So if there's a breakout here, you might just want to place the stop loss on the other side of the level where price is broken out from. If you trade in the reversal here, price just above that level of support, come resistance there, and trail the price on the way down. So as price drops around here, you can move your stop loss here. As it falls further down here, if you're still in a trade, you might want to move your stop loss up here somewhere and just lock in those gains, maybe take some off the table, bank some profit. Okay, so now we're going to take a look at a long move using the Fibonacci levels again on the pound-dollar 1 hour chart. So I've plotted the Fibonacci on the support level, and I've waited for a significant pullback, which has occurred here. So basically you just plot there where the move starts and mark to the pullback. Okay, the resistance of the pullback in an uptrend. So if we just zoom in here, what we're going to do is we're going to, as I said, you can enter the Fibonacci trades based on a pullback or a reversal to the Fibonacci level. In this case, the key level of the 61.8 level of the Fibonacci. So price pulls back, and as you can see, it almost touches perfectly that Fibonacci level, which would have been a good opportunity to get in on this uptrend that we can clearly see forming. Okay, or alternatively, you can also trade the breakout, which is around here. Watch the price action around that point. As you can see, the bulls are winning this battle. We are in an uptrend, so we're not looking to sell. We're around the Fibonacci, the resistance level that we've based the Fibonacci off here. So a breakout of that can be considered a trading opportunity. Again, looking at the Fibonacci, when it reaches the first Fibonacci level here, you can consider perhaps taking some profit, or just very least moving the stop loss up to below this level of support or this level of support. That's another good thing I should mention about the Fibonacci levels. They can be used as not just for entry on reversals and breakouts, but also for targets, take profit targets. Let's just say you did enter in on this initial resistance breakout around here. You know, this could have been your first target. This could have been your second target up here. As you can see, it almost picked the top of that move, you know, not far off. We would have seen this consolidation here, this ranging market, all this bearish price action would have been a signal to perhaps the move has come to an end anyway. And still, there's a profit potential of almost 400 pips. Could have also entered on the pullback, as we said. That could have been your first target here. second target, third target, and in that instance you could have had almost 400 pips as well. So really the Fibonacci levels can be useful. I'll be honest with you, as I said, I prefer just to use my own support and resistance for entry, just because I like to be a bit more flexible. For instance, there's no Fibonacci level really in play here, and I might just want to draw a nice little flag pattern there and just trade the breakout. The Fibonacci is not really helping me there. Although they are open to interpretation, so I'm pretty sure I could draw Fibonacci levels around here and somehow make it work for that particular trade, or just use the targets from here. Even if I did take that entry, there's, it's a fair point that the Fibonacci levels could have worked out as a target. So they're also good for finding exit points. I wouldn't trade them as is, to be honest. Prefer to do my own additional analysis. And also they're open to interpretation, so it's like, where do you draw, where you start the trend from here, and are we going to draw up to our entry here, or but you'll find more often than not that they almost have a self-fulfilling prophecy. It's just Fibonacci numbers in general tend to always work out in one weird way or another. I mean, just there, as we can see, I've moved it from that low there to the pullback here, where we would look to trade the breakout of this flag pattern here. And funnily enough, the 161 level would have been a perfect exit, and that's the Fibonacci just pulling that out of midair. So, there is complex logic behind it. You can read up on it. I've done articles on Fibonacci in the past, but if you don't really want to know or care about how and why these levels appear, you can just use a tool that will calculate everything for you and just use them as a guide. And keep in mind that if you do draw them correctly, there are lots of traders who do watch them, big players, institutions, so they can, again, count towards the self-fulfilling prophecy. You don't just have to trade pullbacks. Sorry, you don't just have to trade the breakout. I've mentioned the pullback, haven't I? So yeah, that is the basics of Fibonacci levels. Hopefully you found something useful in this video. Please like and subscribe for more. Thank you for watching.